Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to discuss about practically value added tax. We will learn how to create VAT accounts in chart of accounts, also how to make accounting entries of value added tax, how to record value added tax entries in general ledgers, how to record value added tax in trial balance, and value added tax in balance sheet, also value added tax payments and receipts, and I will share with you a custom VAT document of Saudi Arabian Custom Authority. Let's start. First of all, we are going to see value added tax on chart of accounts. We need to create three accounts. First, VAT input account, which is related to our purchase or our expenses. Second, VAT output account, which is related to our sales. The third account is Net Vat Payable receivable account as a control account. First two accounts, these VAT input and VAT output account, will not link directly to our trial balance. But these two accounts, VAT input and VAT output account, has to link with Net VAT Payable receivable control account. Net VAT Payable receivable account will be linked with trial balance. For example, as you can see here in our illustration, this is our chart of accounts. Under the current liabilities, we have a control account of VAT Input Output Control account, and this account has two sub accounts, VAT Input account and VAT Output account. This VAT Input and Output Control account is directly linked with trial balance. The difference of these two accounts goes to the VAT Input and Output Control account. Let's see the accounting entries and ledger accounts. First of all, we will see the voucher VAT input. We purchase stationery item as expense for 30,000 and value added input account debit for 1,500. We paid this cash or bank or by customer account as credit. As you can see here, the ledger account of value added tax input 1,500 in debit side, and the balance of VAT input is 1,500 debit balance. The next, we are going to see VAT output voucher or entry, cash or bank receipt or customer account debit by 126,000, VAT output account 6,000 credit, sales 120,000. We sold some goods for 120,000 and the 5% VAT is credited by VAT output is 6,000. Let's see the ledger account. Here we have on the credit side VAT output value and the balance is also 6,000 on credit side. This is the control account which we have created in our chart of account, which is linked with the trial balance directly. Net VAT Payable receivable control account is VAT input value 1,500, which is this, and VAT output value is 6,000 credit side, which is this one. You can see here the difference balance of these two accounts is 4,500, which is credit, because the credit side is greater than the debit side. So 4,500 is on credit balance. Let's see now our trial balance, how it look like. Our trial balance, as you can see here under the current liabilities, we have Net VAT Payable receivable control account, which is credited by 4,500. As you can see here, our balance is in the ledger is 4,500. Our credit side is greater than our debit side, so on our credit side 4,500 will be a positive figure, which is our liability, and we are liable to pay this value to the government. As you can see here, our balance sheet has, under the current liabilities, we have Net VAT Payable Receivable Control account as a current liability. So we will show here the value 4,500, which is our liability in the balance sheet. VAT payment entry and recording. The voucher of payment will be Net VAT Payable Receivable account will be debit by 4,500. Cash or bank will be credit by 4,500. VAT payment made to the government. So here we have recorded VAT input, as you have seen it earlier also. VAT input ledger account 1,500. VAT output record 6,000 as credit, and here our control account has a balance of 4,500 before payment. So when we have made payment, so our net VAT payable control account will look like this. VAT input account debit 1,500, VAT output account credit 6,000, and the balance is credit for 4,500, and VAT payment made to the government for a certain period of time, which is debit 4,500, and the balance will be nil. What if the VAT input value higher than VAT output value? We will not make any payment transaction to the government authority. The net VAT payable receivable account balance will be in minus, and we will submit our VAT refund from government through VAT online portal. Accounting entries and ledger accounts if our VAT input value is higher than our VAT output value. Our control account will look like this, like VAT input value is greater now. The debit amount 6,000 is greater than the credit amount 1,500. So our balance is in minus now. Minus 4,500, which is debit balance. So what we will do if we need to make a payment or make a receipt for this refund, cash or bank receipt from the government and net VAT payable receivable account will be credited by 4,500. As you can see here, our net VAT payable control account, VAT input account 6,000, VAT output account 1,500, VAT payment received from government for a certain period of time, which will be credit 4,500, and the balance will be nil. Here is the trial balance. If the VAT will be receivable or the debit input VAT will be greater than the output VAT value. So here we will be having a minus balance 4,500 in our trial balance, which is receivable from government. Let's see an example. This is a custom duty paper example which is used by Saudi custom authorities. Here is all the information related to the importer, and here is all the information related to the shipment and the shipper. Here is the values of the goods you are going to import and the percentages for the value added tax and the custom duty. And here is the custom duty, total custom duty on the total value of the import, which is 6.5%. This is depend on the product which you are importing. Every product has a different custom duty percentage. Value added tax is 5%. This value added tax is aggregate or accumulation of this custom duty plus these charges, other handling charges, and the total value of the goods imported. So this is a accumulation of these three values as 5%. This is the total custom duty which we need to pay to the government authority. This is the number which we are going to use for the payment of value added tax to the government authority or the custom authorities in Saudi Arabia.